Exercise 6.4 asks us to consider the various costs involved under LIFO, FIFO, and weighted average in a period of rising prices. Just to save us a little bit of time, I wrote these numbers down. These are right from the textbook, from page 306 of the text. If you want to follow along by looking in the text, that's where they are, page 306. So, let's take a look here and see what's going on. In January, they had their beginning inventory of 50 units at $42 for a total of $2,100. In April, they bought 130 units at $44 for a total of $57.20. July, 200 units at $47 for $94. And in October, they bought 110 units at $48 for a total of $5,280. These is the total number of goods available. It's the number of goods, the number of units, and this is the total dollars available. So, let's take a look and see what it asks us first. It says, using FIFO, calculate the ending inventory, the cost of goods sold, and the sales revenue and the gross profit. FIFO means first in, first out. So it tells us the ending inventory. Oh, we have to actually compute the ending inventory. They told us that they sold 440 units. So if they sold 440 units, we had 490. We sold 440. Therefore, our ending inventory, the stuff that we have left, is 50 units. The question is, which 50 units? Under FIFO, the first ones that came in were the first ones that were sold. So under FIFO, we've sold these, we've sold these, we've sold these, and we've sold 60 of these. So of the ending inventory, all 50 units are from the October purchase. So our October 6th purchase, we have 50 units left from that. They cost us $48 each. So the value of our ending inventory under FIFO is $2,400. Next, it asks us to compute the cost of goods sold. I'm going to do it their way first, but I'm going to show you my way, which I think is a lot easier and a lot less prone to error. So they're asking us to identify which units have been sold. So we sold these 50 under FIFO, first in, first out. So we sold those 50 at $42 each. We sold these 130 units at $44 each. We sold these 200 at $47 each. And we sold these 60 at $48 each. That's $28.80. So if you add those all together, the total units that we sold, the cost of goods sold, was $20,100. That's true. That's accurate. I'm lazy. Those of you who know me know that I'm lazy. I know that if my total goods available were $22,500, and I know that my ending inventory is 50 units at $2,400, I had to have sold $20,100. I just think that's a whole hell of a lot easier than doing this. If you want to do it that way, go for it. I just think my way is easier. The other disadvantage of doing it this way is you're assuming that every unit you don't have was sold. What about cost of goods stole? That happens too. Next, it asks us to compute the sales revenue and the gross profit. Well, the sales revenue, they tell us they sold 440 units, and that remains the same no matter what. They sold 440 units, and they sold them for $60 each. So that number's not going to change under LIFO, FIFO, weighted average, casting of inch rules. It doesn't matter. That's not going to change. So our total revenue is 440 units, $60 a pop, 26,400. And that will not change under LIFO, FIFO, weighted average, any method you want. Our gross profit, again, will change because the value of the ending inventory will change. Gross profit or gross margin, as you remember, is revenue, 26,400, minus the cost of goods sold, which we figured out here, cost of goods sold, minus 20,100. So our gross profit in this case is $6,300. Revenue will stay the same, LIFO, FIFO, weighted average. Gross profit will vary, LIFO, FIFO, weighted average. Cost of goods sold will vary, LIFO, FIFO, weighted average. And ending inventory will vary, LIFO, FIFO, and weighted average.